Hey, how's it going, Stock Stories family? My name is Alex Mason, and I am your stock storyteller. This is the channel where we decode the business behind the stock and help you become a better investor. Now, today we're not going to talk about a specific company, but I do want to talk about what's been going on because a lot has been going on. The S&P 500 is down 24% year to date. My personal net worth is down, and that's because I'm invested in S&P 500 index funds as well as a lot of stocks that have gone down in recent months. Let's talk about that. The Fed has been raising rates, and also there's been a lot going on in my personal life. You're probably wondering, like, Alex, where have you been? You haven't been publishing videos. First, let's talk about the market. So the stock market right now is down. We're still in a bear market. People have been talking about recession pretty much all summer, and there's been pieces of evidence of that, but yet the employment market is still really strong in a lot of areas. So it's not really quite conclusive in some circles as far as whether or not we actually have a recession. Interest rates on treasury bonds right now, which are basically bonds issued by the United States government, they're yielding around 4%, which is the highest level that they've seen in many years. So, as an investor in this market, what do you do? What do you do? You see bond yields going up, you see stock prices going down. Does that necessarily mean that stocks are cheap? Well, maybe. The energy sector has been the only sector in the entire stock market that's actually had meaningful gains this year in 2022, whereas basically every other sector has suffered losses. In particular, financials, tech companies, and media companies have really suffered. One thing I want to warn you about is the fact that just because a lot of these sectors have gone down does not necessarily mean that they're good buys or that they're undervalued. One thing that we have to take into account is the interest rate differential. So, one tool that investors use to look at a market's expensiveness or cheapness is comparing the earnings yield of a stock to the current rate on bonds. So, as I mentioned, bond yields have been going up. So if we look at the 10-year treasury, it's yielding 4% right now. As an investor, I want an earning yield on any stock that I purchase to be above that. Or if it's not above that, it better have really strong growth prospects, because why would I invest in that stock if I could get a bond yield that's already 4%? Let's talk some names right now. So, what do I think specifically is undervalued or that merits some further research? Well, some stocks and companies that I talked about on this show before, I think are currently undervalued or look to be undervalued when I first look at them. Definitely look at the banks. So, some of the big banks like Chase or Wells Fargo or Bank of America, definitely check those out. Some of the asset managers, the large asset managers like BlackRock or like a T. Rowe Price, there's some really great companies out there with very strong cash flows that are just suffering in stock price just because their assets under management are going down in value because they're so tied to the performance of the stock market short term. So check out some banks or asset managers if you're into that. Also, I would look at the media companies. Look at Disney. Oh my gosh, like Disney is still trading for around $100 a share, which I think is pretty undervalued compared to the long-term earnings power of the business. I own shares of Disney, and I have owned shares of Disney for years, and yeah, I still think it's undervalued. I would be buying more if I didn't already feel like I owned enough of it. So check that out. If you look at the long term earnings specifically of Disney, go back to say 2018, 2017, 2016, before the pandemic happened, before all of this stuff happened and interest rates went up. You'll see that Disney's earnings power has been consistently very good. And take a look anecdotally too at some of the things going on in the world, like entertainment. So the movies, the big hit movies that keep coming out are made usually by Marvel or by Disney. They just keep putting out hits, and Disney Plus subscribers are growing. I talked about that in a show a few weeks back. So yeah, take a look at Disney. I think it's undervalued. Another stock that I do think is undervalued still is Etsy. I talked about Etsy a lot earlier this year. I did a deep dive video on it, so go ahead and check that out if you're interested. But Etsy is an e-commerce player, and even though there's fears of recession, fears of people spending less money, Etsy continues to beat on earnings every quarter. So it tells you that, okay, analysts in general are undervaluing this company. Also, I think that the growth prospects are pretty good because it has a very large market. It tends to have high return on equity, and it's just in a growing sector. It has a lot of tailwinds that are helping the business. So I own Etsy as well. Now, as far as adding to positions or creating new positions, there's actually really been just one stock that I've been purchasing over this whole time frame, and it's none of the stocks that I just mentioned. I'm not quite ready to reveal that yet because I'm working on a story, a dedicated episode specifically to that company. So be on the lookout later in the year for that episode. But yeah, there's really only one stock that just completely captured my attention. Switching over to life stuff now, I want to first say thank you if you've reached out to me and either written to me via email or sent me a DM on Instagram or reached out to me in some other fashion. I really appreciate you. And thank you for listening to the show, for watching the show, however you access it. And if you're interested in sending me an email, it's alex@stockstoriespodcast.com. That's how you can get a hold of me directly. I'm always checking my emails, so I'll definitely see it and read and respond to you. So thank you for that. For those of you who have reached out just to say hello and share some thoughts about investing, I really appreciate it. Now, some of you may be wondering, like, Alex, where have you been? You haven't been dropping episodes nearly as frequently as you have been the last few months. And yes, I've pulled back on the production of new episodes and new stories, although I definitely have been working on a couple of stories in the background. They just haven't been released yet. Now, I am pretty obsessed about how I manage my time and improving my productivity in every way possible in all areas of my life. And that's kind of actually a big passion of mine outside of studying the stock market. And so I've been very careful about how I've been allocating my time, energy, and attention. And when it came down to it, there's this big personal project that I've been working on that does relate to stock stories indirectly that I just have to give all of my time and energy and attention to. And it's the kind of thing where it's time sensitive. It's a time sensitive project. I've got to do it now. I've got to just hone in on it and focus. That's kind of it. I have to accept that trade off. So I'm not able to produce new stories for you as often as I want to. I just haven't really been able to sit down and work on them because I've had to redirect my energy for now, for the next few months. But I will reveal what that is and how it can help you as an investor, how stock stories I think will improve ultimately because of it. But more on that on a later date. As a reminder, I have an archive of well over 200 episodes studying every type of business from airlines to technology companies to consumer packaged goods to oil companies, everything in between. So I will not stop this podcast. I'm definitely still going. I just need a little bit of time to work on this big project over the next couple of months. So please, if you're thirsty for more, check out those old episodes and drop me a note if there's specific businesses that you want me to cover. And thank you so much again for listening, for checking this out. I really appreciate it. And I just want to spend some time just checking in with you and just letting you know how I'm thinking about the market right now and just what's going on in my personal life. So thank you. I appreciate it. I'll see you on the next one. Bye.